That is the question. Is it enough, and does the money then end up in the right place?
Good morning to all your viewers, and thank you for having me in your show. So before I address your question directly, let me quickly give you a brief backdrop in India. So as you all know, the pandemic has been a kind of once-in-a-century event, which has necessitated a kind of coordinated response in terms of both monetary and fiscal authorities across all economies. And here in India also, both the Reserve Bank of India and the government have announced various supportive measures to overcome these crises. Now, with the improvements in infections still around late February, there were very strong expectations of a strong rebound in the economy in the current fiscal year. And there were expectations of a gradual exit from the ultra-easy monetary policy. This was also actually buttressed with the fact that headline inflation, which was being well within the range of 2 to 6%, was actually showing some signs of stickiness with the price pressures starting to feed into core inflation as well. But unfortunately, like you rightly pointed out, the recent surge in infections has kind of has put a spoke in the wheel, and there is a strong indication that the so-called second wave, which has been prevalent in most of the developed economies, is also, coming and touching the Indian shores as well. So there is a kind of element of uncertainty that has crippled in. But at the same time, I must say that in terms of the learning process, a lot has been learned by the government in terms of what policies suit the economy and what can be done in terms of this crisis. And India has done well in terms of managing all that over the last 7-8 months. And I think with respect to the general public also, it's been, I think the second wave is not creating the kind of lockdown pressures that the first one created, and people are kind of learning to live with the kind of, the vaccination program is going on and kind of living with the kind of infections that are happening, and the lockdowns not really, lockdowns are just going to be very few and far in between. So from perspective, I think the RBI did a very good job recently in terms of coming out with the bond buying program. There were some indications maybe a month ago that they will probably start a exit from the easy monetary policy, ultra easy monetary policy that they had, because India was actually recovering fast. But in the last month, that has changed a little bit. And because of this uncertainty on the growth side, which we still don't believe is a significant risk, but we do believe that I think the measures are going to go on well. Yeah, back to you.
Prasanna, if you can keep your answers a bit shorter, we've got a lot to get through here. So this bond buying program, the immediate reaction was to induce weakness into the rupee. Do you see rupee weakness continuing here?
So I think the rupee weakness which happened on the day of the monetary policy, I must say, did not have anything specific to the bond market, to the monetary policy itself. What had happened over the last few months and weeks have been that there has been a inbuilt position building of carry trade which has happened, which is to the extent of nearly $40–50 billion. And that is basically the reason why the markets actually decided to, go and liquidate their long rupee, short dollar positions when they saw that the COVID infections was actually, increasing. So from that perspective, I think it is a correction that is well warranted. And going forward, we do think that, there is a kind of a depreciating bias in the rupee that we do have. So maybe something to the extent of 75.5, 76 by year end. But having said that, I must also add that the Reserve Bank has picked up a lot of reserves over the last 6 months to a year. And it will actually benefit the economy if it depreciates a little. But I'm also reasonably sure that the Reserve Bank will use the reserves to, prevent a much larger appreciation of the dollar or a depreciation of the rupee.
Yeah, Prasanna, I wanted to ask you a little bit more about that, about how the central bank, you think, will manage some of this liquidity.
So the Reserve Bank has also announced what you call as the variable rate reverse repo auctions in the monetary policy. I mean, they've been starting to do it around 4 or 5 months ago. They had stopped it in between, and they're now possibly going to restart it. So I think what they're planning to do is to take out liquidity in the form of 14-day reverse repo operations or 28-day or maybe even going up to 90 days, because the amount of money which is sloshing around in the Indian banking system is close to 7 to 8 trillion rupees. And they have recently announced an auction to the extent of 2 trillion, which takes out money from the system. So this is possibly the start of the exit from the ultra easy, ultra liquidity provision of policy that they have actually been doing over the last 1 year or so, ever since the COVID came in. So since the infection has actually brought a little bit of uncertainty from the growth perspective, I guess the Reserve Bank would watch this space very closely, and this liquidity will be sucked out gradually as we go into the second half of this financial year, depending upon how the growth really pans out.
Prasanna, I just want to get your thoughts very briefly on what you see in terms of the equity outlook for the remainder of the year. We heard earlier in the week Jefferies, of course, downgrading their outlook for the banks.
So I'll talk about the overall the market. So I think India has benefited a lot from a substantial amount of overweight stance that international investors had in the Indian markets. Now, going forward, a lot is going to depend upon how emerging markets are going to attract flows. Now, of course, that would be dependent upon how quickly U.S. bond yields go up and what is the behavior of the dollar index against the rest of the currencies. So the base case view is for us to believe that there will be a short-term appreciation of the dollar, but over a medium term, there will be a depreciation, and U.S. yields will go up, but they will go up only gradually, which all makes us believe that emerging markets will get a lot more, will continue to get in a lot of money, and India will get its fair share. I mean, India has been getting a much higher allocation of the emerging market funds flow in the last 3 or 4 months. But I think going forward, India will get a kind of a market weighting amount of allocation from the emerging market. So I think the outlook in equities is good because we are also having a very good earnings upgrade cycle that's going to pan out over the next 2 years.